Hi, I'm Jim Paolino, CEO of Lodestar Software Solutions and the host of Lodestar's Lendingleaders. On this podcast, we bring in thought leaders from across the real estate industry and occasionally outside of it to have conversations that are insightful, interesting, and impactful. Let's get started. Hi, everyone. Welcome to this week's Lodestar's Lendingleaders. We have a very special guest today, my friend Kevin Peranio, Chief Lending Officer at PRMG, absolute industry rock star. If you don't follow him on LinkedIn, you need to after having this podcast. Just a wealth of industry information. Really excited to have this conversation. And Kevin, thanks so much for coming on.
Hey, thank you so much.
Yeah.
Come a long way since our first meeting. I think it was in Denver at the NBA.
It was. I know. I was surprised you even took the meeting. So I'm really happy.
Of course,
You've always been so generous with your time. So I'm really excited to dive into some industry stuff here.
Thank you.
So kind of two-part question to start. What's gotten you into the mortgage industry and what's kept you in the mortgage industry over the last 20 plus years?
I was living in Austin, Texas in 2001, and I was working at Dell Computers. I had just come off about a year and a half at them. And what's interesting is that experience at Dell has really shaped a lot of like my beliefs on where this industry is going. And I'll just say that when I started at Dell, we were selling computers for $2,000 a box to start, and then when I left, they were at $499. And so I just felt like every industry kind of goes through that cycle, and there's really thinning of the crowd. And we're seeing a very similar cycle happen right now. So, after I couldn't make as much money for as hard as I was working,
right.
My buddy Matt Fankhauser, who works over at SoFi actually right now, he's like, dude, I've just stopped being a realtor. I joined this company, First Magnus. I'm a wholesale account executive. I get to go out in the field and I get to meet brokers and I get to go talk to originators and there's a little bit of road travel. He's like, you'll love it. I was like, and I was literally sitting on a beach in Venice Beach at a buddy's place, who had just moved out there after college. And I'm like, do I move to LA and try and figure out what's going on? And I'm like, nah, I don't like being broke. So I'm going to go try out this mortgage industry. And that's how I got in it. And my mentor at the time, I had Ramaj Bali and Leslie Inman. I really connected with them. They really trained me up, and I just fell in love with the business. Ramaj used to say, the business is people and numbers. So I love numbers. I love math. And I love people. And then of course, I really got trained by Leslie on like the nitty gritty. And if you love to learn, it's never ending in this business. It's never ending learning. It's not like you have some mundane task you just do over and over. There's just an abundance of stuff to learn. It's always changing, especially with regulators sticking their, hands in everything and, just changing the rules. And now, like we're in the middle of the most epic refi boom ever. And like, hey, let's have a brand new loan application, and, there's just challenge after challenge, So that's really what's kept me in it, and I'm with a great group. I'm a partner here at PRMG. Thank God, Paul and Robert, the two founders, they believed in me. Gary's our other partner, and I feel like now there's a lot riding on it. I have to serve 2,900 employees and growing. I have to make sure that they put food on their tables for their families. So, there's a servant attitude in the way I operate, and then there's also a survival instinct. And I think, a lot of the stuff that you and your team are working on, a lot of what we're working on, how do we navigate this new landscape and survive and then thrive? That is, that's a lot of what, just keeps me going and gets me ticking. So I appreciate you asking a great intro question.
Yeah, a lot to go off of. It reminded me too of the quote of a loan officer is just a realtor who can do math.
I haven't heard that one. Yeah. That's the first time I heard that. I'm going to use that one. I'm going to use that.
Yeah. So going off of that and kind of your concerns, the Mount Everest size view that you have the industry now, and you say a lot in your content, the unknown unknowns. And what keeps you up at night? What are the things that, are those areas of concerns? If you see that posted in the morning on your phone, you'd be like, oh, this is going to be a long day.
Yeah, there's something that's like really big that's always been in the back of my mind. I remember being in, I guess it was really high school, and studying European history. And if you look at Europe, and the society is much older than America. America's a teenager compared to Europe. And then if you look at Asia, even more established. And so I've always had this thought, like, so this is how these societies have evolved over time, and that's what they look like when they're well beyond the years that we are. So I look at America and I go, are we going to be like Europe? Are we going to have a wide gap between the haves and the have-nots? Are we going to have a super erosion of the middle class? And I just always think, like, I have to work so hard because I have opportunities that my children might not have. Now, America is different. We are a different country. We have an abundance of opportunity. Our business is fantastic. You don't have to have any sort of education. You don't have to have, the barrier to entry is very low, at least it has been to this point. And now we're seeing even that change with the NMLS and licensing and taking a test. And then when fintech comes in, where do you fit in when so much is automated and it's harder to break in? So I guess, those kind of thoughts have all come together. It's like when things change and there's, a haves and have-nots, which, by the way, owning real estate is like the best way to be a have for the average person. So I love giving back. So for me, it's kind of like, I'm a race against time to set up my children for a better, life, to set up my teammates and my company for a better future, and really fight on behalf of maybe people that don't have all the resources of the haves, of the banks or the hedge funds or the fintech, VC backed billionaires. It's just that's kind of all that's kind of changed my mindset, and that's really what keeps me going every day.
Yeah, that's great. That's so much to kind of dig into. It reminds me, growing up in the title industry, it's very easy for us to lose sight of all the problems that we have of dealing with technology or dealing with clients or dealing with other businesses. But when I ever happen to be at that family title company, I'm working on something else, and then I see someone come in for their closing, and they're dressed up, they're nervous, they're excited. It just makes you realize, like, how big a deal home ownership is, and like kind of how that is such a pathway for people.
That's so cool that you being in title, you got to see that look on their face, that excitement, like every day. It really, because sometimes you get lost in, oh man, like this, like you said, this is gonna be a long day, or this, I just had this awful thing. But then that's kind of what, like, my kids ground me, right? I get home and I see, like, they're just so happy. They have no idea, like, how hard daddy has to work for them to live in freaking Newport Beach, but it's like they just, like, everything just falls off trees, but that grounding you had at a title company, that's pretty awesome. You get to see, the home ownership, the American dream, the stuff that's altruistic that makes us, really inspired to do what we do.
Yeah, I think it's easy to lose sight of that, especially in the industry now, and especially how so much we do with technology and dealing with businesses. I would love to hear at PRMG what types of things you guys are doing with fair lending and kind of keeping that, that equity in mind.
Yeah, I think our overall just culture here is, we have two founders, Paul and Robert, and we have a saying: "They built by originators for originators." So if we serve the originator and we make sure that they're set up for success, then we know that originators will take care of the consumer. So we're just doing right by the consumer through the originator. And our hearts are in good places. We're not we're conservative generally with our money. We save. We're serial savers, which is a whole part of the financial literacy piece in what we do. If you think about what mortgage and real estate professionals do at the local level, by the way, is they teach financial literacy. And so for us, we feel like fair lending is just table stakes for us because we're doing right by the consumer. And what was interesting is we had our new hire orientation yesterday. We had 129 new hires that were on our monthly orientation. I do the closing comments. So it's the second Tuesday of every month. I do the closing comments. I'm thanking people for for putting their faith and trust in PRMG and putting their family and careers here. And then I take some Q&A at the end, and someone actually goes, I am a green loan officer. I just in the business. What advice would you give? And what was interesting is I said, within 2 weeks, certainly within a month, you are now an expert and have the confidence to know that what you're teaching and telling a borrower, even though you just learned it yourself, you're now an expert. And so, you have a crash course here. We have training here. And so it's just amazing to kind of have that question for someone that's just getting in. And I'm like, be confident, you're on the front lines teaching financial literacy to consumers, and they need our guidance. They need our help. And that's how we move. That's how we operate. That's how we feel like we're a fair housing lender, and we think we're on the right path.
Well, that's a great point too, about being an expert. I think the average consumer does 6 or 7 mortgage transactions in their life. A new loan officer.
This is a debate we're having. Okay. So my buddy Alex Contition, he says it's 11. I say it's 9. But you know what? You might be right, because after
I could be wrong.
Well, we just had the lowest rates ever. Yeah. Right. So, I'm not refinancing out of that rate ever. I can't imagine, so maybe that kind of knocked a few off the average.
Hey, you know what they say, 70% of all statistics are made up.
I heard Peter Lynch say, he said something very similar. He says, if you spend 10 minutes on economics, you wasted 7 minutes,
But even if it's 11, right, the normal loan officer is going to deal with more transactions in a normal week almost than someone would in their entire life, right? So that expertise is something that you're going to gain really, really quickly.
Well, think about a wholesale account executive now. Yeah. So that's where I got started. So a loan officer, like you said, is dealing with a few scenarios a day. An account executive is dealing with dozens every day, because they're helping, mortgage brokers out there or correspondents out there who are calling them as the expert, as the product and guideline expert. And so you really get a crash course. You nailed it. I mean, you just become an expert so fast in this business, especially for a consumer, like you said. They're nervous and excited when they walk in the closing table. It's their first time. It's such a different perspective.
And I really think it's just important for loan officers to keep that in mind, that this is, a relationship business. This is that big of a deal for people. You talk a ton about technology, right? And a lot of the content you put out. So tell me, when are the robots going to replace loan officers?
Well, that is a great question.
Or realtors, whatever it may be.
Well, you look at all the big, fintech disruptors out there, the billions of dollars. I mean, they've targeted real estate agents first, and there's definitely some erosion there. Listing agents, you still control the listing, you control quite a bit, and I think that is still such a local level. If I'm a realtor and I've been in the neighborhood for 5, 10, 20 years, I'm knocking on doors, hey, I know this neighborhood. I know what your house is worth, and I know how to market it. I know how to sell it for you. And you just, I'm not talking about like the part-timers, the ones that do a couple here and there, not the ones that are badass, they really get it. You just can't replace that experience and in the fact that they're local. So I don't see complete replacement. Now, as far as the both LO and real estate agent, there will be less. And each of them will have to work for less, and each of them will have to do more for less. And that's where technology comes in to help a local originator or a local real estate agent. We have fintech companies out there like yours that are focused on us. You're able to help private mortgage lenders, independent mortgage bankers. You have tools that help us succeed and fight the fintech disruption for the centralized, companies that are in the Bay Area or Seattle or wherever they are. And so I feel like the loan officer job is definitely, it's hard to go through all the math and all the all the stuff on the loan estimate. I think that's a skill set that is always required, especially for a first-time home buyer who really values just picking up the phone and talking to someone who then also is local, because that local knowledge you kind of throw in there together with all the rest of the stuff. it really is a winning combination. So now, 45% of the world's jobs can definitely be automated with existing technology. And so there's a lot of stuff out there that can be automated, but I still have faith in the human connection. I mean, all these restaurants that, we didn't go to for a year, we're going to start going back to them. Why? Because we want to get out and be around other people. Just like when you're doing a mortgage, you want to talk to another person, you want to be around people. Not everybody, there are people that don't, value that. So I think it might get more narrow for sure, but definitely not a complete extinction event.
No, I'm taking my first Uber tomorrow morning for the first time in about 15 months.
Oh, yeah?
I'm so excited. Yeah, because I have a meeting to go to. I was using the car, so I'm like, oh, great, I get to take an Uber again. It's just funny to your point about the personal touch.
I flew in the other day from Park City, and I had an Uber home Friday night, and my Uber's driver, his name was Muhammad Ali. And I said, Muhammad Ali, you're the greatest of all time. And he just kind of looked at me like, I've heard this at least 1,000 times, Yeah. And but yeah, it was just good to have like a human interaction there with the driver. And he did not drive and float like a butterfly and sting like a bee. He drove like a turtle. But it's okay. It was safe. It was good. And good luck on your Uber.
I had a driver once whose name was Tony Montana. So.
Oh, that's awesome. Yeah. I actually love the fact that you brought up Uber, because Uber and Lyft, what the things that your team is building, and the things that that technology is trying to take out of our industry is friction, right? So you want a frictionless experience. Now, that doesn't mean the entire thing is completely automated, because obviously, there was a driver in my car and we spoke. Now there are driverless Ubers. I've been in one in Phoenix, and so they are trying to completely, at least that job is trying to be completely eliminated. But I always use that analogy that we're trying to use your tools to create a frictionless experience. Instead of sitting on a corner and hoping a cab comes by and wasting time, I pull up my phone, I say where I'm at, I boom, 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 and I'm done, and I'm there. It's a completely frictionless, efficient, better, faster, cheaper, as I like to say, in that order by design. I say better first, because if you have a better and faster experience, you don't necessarily need the cheapest. But you can have it. You can have all three. And so I actually use that analogy all the time about Uber, and I think it's really appropriate that you brought it up.
Well, so going off that point, looking at the mortgage process now, where is that friction?
So there's a few points. So point of sale. Taking a loan application, as a lot of loan officers, even here today, the bulk of our applications taken by our retail channel is they get on the phone with the borrower and they ask every single question. Now, I mean, it's like you can take 30 minutes, doing that when, just trust the technology. Send them the link. Say, you know what? I'm going to schedule 20 minutes of time. And so instead of 30, 20, I'm going to schedule a 20-minute conversation with you, maybe even 15. It's up to you. I want you to fill this out, and then here's the time we're going to get together. So then when you get on the phone with them, you already know how many dependents they have and how old they are. I see you have 4 kids. Their ages 8, 6, 4, and 2. Are you looking for a new home because you've got so many kids? I've got a great neighborhood because I'm local. This is a great school district. Here's a good area. Oh, and by the way, I can refer you to a local real estate agent that knows all this stuff just as much, if not better than me. That is a relationship deepening use of your time, because you used technology and tools like a point of sale to get a more completed app, as opposed to sitting there and wasting 30 minutes. Are you a co-endorser on a note? Are you in bankruptcy? Are you like you're literally going check by check? Let them fill that out. And
it's probably the way you mentioned too, by the person filling it out on their own, it's probably their preferred method too.
For millennials, it is for sure. Now the largest demographic in housing, they're the first-time home buyers. Their average age is 32, 33, depending on which report you read. And that is their preferred method. They want to make most efficient use of their time if they do a phone call as well. And so point of sale is one. CRM obviously is a big part of our tech stack. We've had some great luck. Very unique thing called FinLocker. And it's basically like Mint budgeting, Credit Karma, and they have a great agreement with both Fannie and Freddie, where you can run to you in the locker. So you give a borrower a locker, when they're a prospect, and they're kind of like learning financial literacy in the locker, and they are empowered to control their own information and data before they're ever alone. They could just be a prospect. Yeah, I got 6 months left on my lease in my apartment. I'm not ready yet. Like, here's a FinLocker, and then, so that's been a great one we've had. Credit Evolve, formerly known as Get Credit Healthy. They've been fantastic. All right, you've got some credit, but we need a year to work on your credit. We need 6 months, maybe we need 3 months. Here's a team that can help with restoration and help you work through that. And they're integrated inside systems like yours and ours, inside our Encompass environment. Those are some tech tools that we've had some great luck with. Insurance is changing. Matic Insurance is one that's I'm personally a big fan of. Ben Matic and team are incredible. They make it so easy to order a quote. And of course, you've got so many other parts down the line. Capacity. I actually did a call with them today. I did a live panel on Housing Wire today, and with Alex from Sales Boomerang, and then David Carendish, the founder of Capacity. Capacity is an AI bot, and it helps us automate all of our help desks and all of our ticketing and try to get rid of email. But then they go into workflow automation, back behind the scenes. So, there's just so many different things that are out there that we're all working on together. Your tool set, everything you guys are doing and involved. I mean, think about when you and I first talked about, and some of the tools that you were presenting to us, and you've just evolved into a full suite of tools and capabilities, which again, you're focused on us. You're our champion. I mean, we need fintech tools to survive any kind of disruption from people who are better capitalized than we are.
Well, I think the people's appetite for it has changed now of, for us, we need a quote just for the LE, to, no, I need a quote at point of application. I need it even before that. I need to confirm fees after. Like the customers getting more educated because like you, my favorite thing about your description there was you thought of everything as an ecosystem and how it's related. And I think that is so important than looking at technology because people aren't just distracted by like the shiny ball. Yeah. Right. So I think the idea of people know, I need this here, I need this here, I need this to kind of work throughout as an ecosystem, because otherwise, if you just have one okay piece of technology that's not connected with anything else, it's just not going to make a difference. It's going to be more trouble than it's worth.
It's a challenge, our tech team, do you cobble together a bunch of things, or you use an AI bot to solve one piece, but how does it fit into the rest? It is, every company's different too. There's no one right answer, and the results at the end of the day speak for themselves.
Well, you had mentioned, so at the top of the call, being at Dell and seeing the margins just shrink from 2,000 to 499. I mean, you're saying that there's been a version of that in this industry. So aside from technology, how do you think the industry can fight that? Or, what's your approach on seeing something happen like that now as things get commoditized?
So what's interesting is, we just came out of a recession, and, our industry is, recession proof. When rates go down because, the Fed's trying to stimulate growth, we're booming, with refinances. And so last year, imperfections of companies were covered up because loans were literally falling out of the sky. There wasn't enough capacity in the industry to handle $4 trillion in loans. This year, we might do 3 trillion, maybe a little under. Still a fantastic year, but it's down. It's going to be down 25% or more. Refinances will be down more than that by percentage. Obviously purchases, pick back up. And so what's interesting is everyone built their capacity to handle all the loans in fulfillment and warehousing and everything else. And then now there's less. So there's a couple things that happen in that transition period. You go through a price war. Okay. Now the question is this price war now this time, is it permanent like it was when I worked at Dell? Michael Dell, Love that guy, super inspiring. He would walk, right by our cubicles, just seeing what's up. There was like 10, 12 different, computer companies out there. You had Gateway with the cow on on the boxes and all that kind of stuff, and Michael's like, you know what, why do we have all this competition? Why, some of the bigger lenders, a lot of them went public. They went and got more money. They've got single owners or maybe just a couple owners that, any one of them can do what Jeff Bezos did or what Michael Dell did or what Ian did and say, you know what, we're going to run at a loss, or we're going to just, crush the competition, and, we're okay with that. So I don't know that, like, what's going on right now. I don't know if it's like how it was before when you come out of a refi boom, you see the banks and the hedge funds, they just cut staff because they don't want to be overstaffed. They want to save some money. And then everyone kind of brings their capacity down to the level of where it needs to be. And then everyone can survive at that level. Mm-hmm. I think this time is different. I think with the amount of lenders that went and got public money and larger partners, I think there's a real strategy by some big players that they're gonna sell books at a loss for 11 years until Barnes and Noble goes out of business, and then all that's standing is Amazon. And so, I feel like this time is different because the technology has finally come into, our traditionally archaic industry. But the good news is there's a lot of great tech that, individuals can have, or individual teams. And so I think the real estate professional and the originator are going to bear the brunt of the changing landscape, and they're going to have to work for less because the consumer is going to demand that Amazon experience, that Uber experience. They want better, faster, and cheaper. And, you see Chamath Palihapitiya when he talks about open door. He's like, why do real estate agents get, 6% commission? We think that's too much. He just flat out says it, he's basically saying, you are paid too much. We're going to build tech that does it better, faster, and cheaper. And now, of course, you and I both know, we think that local real estate agents and originators are worth more than a fintech only experience. But how much more? Because the consumer is ultimately the one that decides, not me, not you. It's the consumer that decides. Ask any consumer right now, ask 1,000 consumers, do they want to wait for a cab? Do they ever order cabs anymore? I don't know. Mm-hmm. Barry Habib likes to talk about whatever happened to travel agents. They used to be on every corner. They're all gone. So the consumer is really what's driving this change, and change is coming. It's here.
Or, do I hire a realtor? Do I go through the process? Or, insert iBuyer name is offering me 95% of listing on this house. Let me just do it.
You just press a button.
Yeah.
Press a button. You get your cash. It's like, bam, here's 150 grand for your house. You're like, awesome. People like that,
Mm-hmm. Well, and then just to kind of wrap up this example here, in that case, who is the Barnes and Noble then? What type of companies are the ones that you feel are most at risk?
I think the companies that don't work on their OpEx, operating expenditures. I think companies, we're working to get every single loan underwritten for $100 or less. Mm-hmm. And that's our goal. Underwritten. Underwriters are expensive. They are so expensive. Now, we don't want to get rid of underwriters. We want them to do more. The salespeople have to do more. The realtors have to do more. Underwriters have to do more. So if I can get a cleaner file, a more efficient file, a cleaner, more efficient process behind the scenes, and I can get the most out of my underwriters, who are absolutely the backbone of our company and our industry. They're the ones making financial decisions. If I can get more out of them, then I can play in that space where we can provide the same incredible experience for less, for a better rate, for a better overall cost for the consumer. I think title companies. I think title is going to be a big one. Obviously, you're very well aware of that. You look at blockchain and you see what it's going to do to title. The big title companies, they control the data, but someone's going to find a way to break in that space. Why would someone pay so much for title hey, it goes from A to B. What am I insuring? It's like there's no imperfections. There should be no imperfections. because everything that's ever happened is on a financial ledger here in blockchain technology. What am I insuring? It's all right there. So, I think that's a piece that is disruptable, and I think the cost will come down. The cost of insurance will come down. I think the cost of appraisals will come down. I think there's, just overall everything is going to get more efficient. It is what technology does. It looks for inefficiency and it attacks it, and it makes it more affordable, and it makes it better, faster, and cheaper.
I think what I really like is how you're looking at people like your underwriters, your loan officers, and you're saying, what is your highest leverage role? What is your highest leverage skill? What can you do that we can't automate with technology? Because I think that's the way that you have to look at everything. And I find it very challenging for some clients to get there when I talk to them, because they want to protect. They feel like if people don't have things to do, they're not going to do any work. I feel like they don't really have that same idea of, no, we want you dealing with people. We want you building relationships. We want you making these important financial decisions that we can't automate. So I think it's really good that you have that mindset. It's refreshing to see. I'm not going to get into it now, but I'd fight you tooth and nail on the cryptocurrency thing, because I do not think that blockchain is going to get there in this industry. You're talking about an industry that had the technology to do a digital closing 20 years ago, right?
I know.
So I think the how far we are from getting everything on a blockchain is just ridiculous.
I actually agree with you. And I think the reason, well, the e-closing is a government thing. So governments, run slow. Title, and I want to separate cryptocurrency from blockchain technology. Right. So, although I am a huge fan, I love Bitcoin.
I was going to bring up Coinbase too. I don't know.
I bought some today at the IPO. So,
down a little bit, but you never know.
Yeah, no, it's totally over priced, but I'm a big fan of it. But to blockchain technology, what's interesting is you've got the First Americans and Old Republics, and you have all these Core Logic. You have these companies that have all the data. They control the data, and so it's really going to be up to them to decide when to allow blockchain into title, for example. But a financial ledger that cannot be tampered with, and every single transaction is ever recorded. This property sold from A to B to C all the way down the line. Here's everything involved. I mean, you can't. There's some value in that technology. Will it make it? I don't know. I mean, someone with billions of dollars is going to say, you know what? Fine. You don't want to give us your data. We have enough money to sit around and wait and get our own data through other means, and we're going to institute it. And that's what disruption is always about. Blockbuster, they could have pivoted. They could have found a way to do things online like Netflix, and they didn't, and ultimately they're not around. And so I think I do agree. Our industry does move slow when it comes to technology adoption, but man, things have really sped up in the last 5 years.
Yeah, I mean, the last year especially too. I think it's really catalyzed a lot of things going on. So it's going to be interesting to see. And I don't want to take up too much of your time, but yeah, I really appreciate you coming on today. The last question I like to ask all of our guests is, what gets you going in the morning? What gets you up, excited, ready to drink 5 cups of espresso and go and do five of these types of calls in a day?
Well, let me just say this. I don't sleep much. I just don't. I am 4.5 hours a night, sometimes 3, usually no more than 6. And it's always 90-minute increments, which is your typical REM sleep cycle. I don't use an alarm. I just wake up when I wake up. It's almost always in one of those increments. I have 4 kids. They're young. They always seem to get up and make a lot of noise. Yeah. So, when I'm starting to get kind of like, it's time to wake up, like, they get me going. I hear them out in the living room and they're trouncing around. Yeah. So that gets me going. I love waking up and watching the stock market open. every day. I grew up, with my dad and mom watching the ticker on CNBC and watching. I'm just so fascinated with what goes on in business and all the developments that are going on in the world. And so I love watching, the market open and just, even trading a little bit, here and there. So those are all things that get me going. And then, my old team, before I moved to California 5 years ago, I was in Fort Lauderdale for 13 years, and my old team is out east. They're 3 hours ahead of us. So, I'm getting emails from people on the team. So your brain is alert. The most alert it's going to be the second you wake up. People don't realize that. They run and they go straight and they get their coffee. But your brain is actually the most alert right there when you wake up. You're actually just building a tolerance to caffeine if you drink right away. Your brain goes through waves, ups and downs all day. At about 9:30 is when you want your first dose of caffeine. So I do my double espresso at 9:30. I do my second double espresso at 2:30, which, it's 2:45. You saw I just finished mine. That's my second espresso of the day. So there's a science to my sleep. There's a science to my caffeine intake. And my children and the market are usually what get me up every morning.
A method to the madness. I like it.
That's right.
I like it. Well, I appreciate it. That's a great note to end on. Thanks so much for your time, Kevin. Is there anything, if people want to find you, or anything you want to plug to wrap it up here?
Well, I'm trying to build a community, and I appreciate you being part of it as well. I think open collaboration, especially for those of us that, aren't billionaires and fintech, disruptors, we're trying to, just openly talk about what we're doing that works. So feel free to log in to LinkedIn and hit me up, Kevin Peranio, Peranio. You can just connect with me there. I put out some video content a few times a week. And happy to continue to build a community together. And I appreciate you inviting me on the podcast. And let's keep rocking, brother.
Absolutely. Thanks so much.
Yeah,
Thanks for listening to this week's episode. Please like and subscribe wherever you get your podcasts. We'd also love to hear from you in our comments or at lendingleaders@lssoftwaresolutions.com. A very special thanks to Elena Gardner and Brian Rieger, who help produce our episodes each week. See you next time.